All right, so I say this a lot. Managing a mortgage is just like aerating, fertilizing, watering, mowing, and trimming your lawn. All right, it takes a lot of maintenance over long periods of time. You want to make sure that you're not paying too much at any time of the life of your loan by checking to see if there's a better long-term solution out there by closing out your current loan and picking up a new one. Okay, the variables that determine your interest rate are changing all the time, and so are the financial markets. Right now, a lot of people just assume, and I love this one. They always say that you'll hear people say that you should only refinance if the new rate drops by 1%. That's not true in every situation. Sometimes it doesn't need to drop by a whole percent. It might only need to drop by a half, or it needs to drop by more than 1%. There's three things that you have to look at to determine if you should get out of your current loan and into a new one. It's just these three. Okay, number one is the interest change. And for this, I'm not telling you to look at the change in actual rate you get. Focus on the reduction in total mortgage interest you'll pay over the course of the next 1, 2, or 3 more years. Okay, so if you have a $400,000 mortgage and decrease the rate by 1%, then standard math tells you that you'll pay $4,000 less in interest over the next year. And then you combine that into 3 years, you're gonna save close to $12,000 in interest. Okay, so the number two thing now that you look at is the closing costs involved to do this, which most people choose to finance into the new loan instead of paying these costs out of pocket. You just add those onto the new loan amount. And by the way, you could do one of these refinances without closing costs. It's just gonna mean that you're gonna take on a higher interest rate to do that. And you always can check which one you want, one with the standard amount of closing costs or with none. So that's number two thing you look at, the closing cost. And number three is the amount of time you expect to continue to keep the home for. So the longer you think you'll have the home for, the more it will make sense to do a refinance, because that means more months of savings from a lower rate to make up for the closing costs. Now, if you do this with me, I'll give you a further analysis. There's a lot of numbers you can look at. I can't even explain them all here. There's even tax implications that you can get help with a CPA with, but further numbers will only make this decision easier for you. But the three I show you to look at here will show you enough of what you need to see in 95-98% of cases. Okay, so let's check a few examples and decide if it would be a good idea or not. Example one, let's say you save $3,000 in interest over the next year, you pay $4,300 in closing costs, and you're gonna be in the home for another 5 to 7 years. Well, this one's a no-brainer. You're gonna save $3,000 in interest in year one of the new loan. Then year two, you'll save $2,800, $2,900 because those interest savings decrease over time per year because the loan becomes smaller and smaller. But you're gonna break even past those closing costs within like a year and a half. Okay, and then after that year and a half is over, you got then 3.5 to 5.5 more years to keep on making those interest savings. So that's that one. Example two, let's say you make $2,100 interest savings on the first year, you pay $5,200 in closing costs, and then you're gonna be in the home for 3 or 4 more years. Note the time it takes here. It definitely takes some effort to do a refinance in some cases. Technically, yeah, you should break even past the closing costs with your savings, but that's a judgment call. You may or may not want to do it there. I would totally understand if you wouldn't. Then example three, let's say you make $5,000 in interest savings, you're gonna pay $6,100 in closing costs, you're gonna be in the home for another 10 years. This is another obvious one. You would definitely take that. You're gonna save, the whole closing costs within 15 months there. And then keep on saving after that. Then I'll do a little twist to this one. Let's say you wanted to take on a little bit less in closing costs for this, not $6,100, but you could, just like with all the other ones, you can always decrease the closing costs to increase the interest rate. Let's say instead of taking $6,100 in closing costs, you increase your interest rate so that you're going to only save $4,400. But again, you're going to be in the home for 10 years. So, you're going to see that savings, break even date right away. And it's going to be still a good one, but maybe not as good as the one above where you're saving $5,000 in interest a year. A few notes when you're making your decision. You may have other items in mind, AKA starting all over again, but I wouldn't recommend you look outside these 3 specific factors. Don't be greedy. I've seen a disgusting amount of people pass on a refinance because they wanted even more savings, which they never saw, and then rates ran up, and they never got a chance again when they otherwise would have made fantastic savings with the refinance opportunity presented to them in the first place that they thought wasn't good enough for them. Another note, you will need a new credit check, proof of income, and possibly an appraisal to show that the home still has value for the lender to make a new loan on. That is except for the IRRLs, the interest rate reduction refinance loan. This is a special VA veterans refinance loan where they don't need to do like any of that credit check, proof of income, appraisal. It's like one of the greatest gifts to the mortgage industry ever. And then remember, this is different from mortgage to mortgage. Just because your neighbor did or didn't refinance doesn't mean that you should or shouldn't. But if you hear that some people have done it lately, then it might mean that opportunities exist for you. And that it would be a good time to go and check it out and call me to figure this out for you. Okay, I can always walk you through the numbers and analysis for your exact refinance scenario. So guys, I hope that made sense. Call me for questions. Write me a comment if you have any feedback for me. And thank you very much for watching.